Hi, welcome to BUSS1030, Accounting, Business, and Society. This video goes over week one's material, which is basically just an introduction to the course and some basics and fundamental concepts that are drawn from week one's learning material. So, um, as all videos, I'm going to turn off this camera very quickly, and then you guys will be able to see my screen. So yes, starting off with all other subjects, I'm going to go to the USID website about Buzz 1030. So Buzz 1030 is one of the mandatory classes for all commerce students to take. I think this is more of a practical sort of business, a fundamental business class. Well, Buzz 1000, Future of Business, is more of the theoretical sort of framework, sort of theoretical analysis of a company. Buzz 1030 is more of a practical introduction into businesses, into accounting, and into businesses' impact on society. Now, if we just look at the class, the weekly schedule, and the breakdown for how this class is is actually conducted, we could see that this is a lot of this is also like an intro to business sort of class. It is a foundation, it is a mandatory class, but it is a lot more practical when compared to a lot more practical, a lot more concrete, a lot more objective when it comes to the introduction to the material that is conveyed. So like week one and two, we talked about introduction to accounting. Of course, accounting is the language of business. Is without accounting, business cannot be conducted. And then we're going to be talking about developing a business plan. So CVP analysis, cost, volume, profit analysis, developing a business plan, budgeting, mid-semester exam, revision week, the accounting society, so system concepts and applications, internal controls, managing and reporting working capital, income statements, balance sheets, statement of cash flow, short-term planning decisions, evolving topic, and whatnot. So as you can see, these are certainly very intro to the these are certainly very intro to business sort of concepts, sort of very fundamental concepts about business. But like Buzz 1000, this is also mandatory, and I just feel like it is a lot more concrete than Buzz 1000 is. So right, okay, getting into week one, what did we actually talk about in week one? So we talked about first of all, just this is just more or less an introduction into Canvas, into so as we can see from the learning objectives. So familiar yourself with Canvas. This is the website that they communicate with. Understand our learning schedule, so that would be the lectures, the tutorials, and what our role as students should be. Assessments. Let's talk about the assessments really quickly. So, tutorial participation is 5% of the grade. Fortnightly quizzes. So we have quizzes every 2 weeks, and that contributes to 20% of the grade. So 4% each. A mid-semester exam covers the modules 1 to 5 or chapters 1 to 3, and it covers 25% of the grade. Lastly, the final exam covers material from 6 to 13. So materials 6 to 13, although this will require knowledge from modules of 1 to 12, the assessment is mandatory, which means if you fail this, you fail the whole course. And it contributes to 50% of the grade, and it is a proctored closed book exam. So this is sort of what the assessments look like. Of course, tutorial participation and engagement. It is being active in the discussions. And like most other classes, we are supposed to do the modules. We are supposed to do the readings. We are supposed to have watched the recorded lectures before attending the tutorials. So that is the expectation. Fortnightly quizzes, quite straightforward, just what we learned in the last 2 weeks. And each of the exams contribute to 4% of the grade. Fortnightly quizzes are coming up if we look at the time. I'm recording at 12 a.m. today, but it was a Saturday. We have Sunday, and then Monday, which is tomorrow. We have our first fortnightly quiz. So we're certainly going to be talking about revisions with that when we get to week 3, which I am currently in week 3 recording this week 1 video. So I had some time to process. I had some time to make sure I understand all of the information, all of the context before I actually jumped into recording these. Okay, so that's sort of a snapshot and sort of an understanding of what the assessments are like. All right, so in week one, what we also talked about, so yeah, this is just basically introduction to the course, and yeah. So okay, we talked about first the different types of enterprises. So we have merchandising enterprises, which are businesses that purchase goods for resale to their clients. So think of 7-Eleven, for example. 7-Eleven buys items bulk and then they resell it to their customers. We have wholesalers. Wholesalers are merchandising businesses that sell their goods to retailers and other commercial users. So merchandising companies are client-facing businesses. Wholesalers are merchandising businesses that sell their goods to retailers or other commercial users. So they could be either business to business or business to consumer. And for example, Costco is Costco is a merchandiser, but it gives off wholesaler vibes. But sure, manufacturing businesses are businesses that buy inputs and raw materials and whatnot, and it sells products that have value added to it. Uh, and lastly, capital refers to funding of a business to operate and to expand operations. Capital could be money. Capital could of course also be machinery and whatnot. So these are some introduction to types of enterprises. Now, if we think of restaurants, what sort of enterprise is a restaurant? Well, of course, it is client facing. Of course, it offers products to consumers. And of course, it purchases certain materials and offers it to customers. So, of course, businesses also, I mean, restaurants certainly are merchandising businesses. On the other hand, uh, businesses buy tomatoes. I mean, restaurants, they buy tomatoes, they buy eggs, they buy beef, and then they make a steak dinner with it, with those materials. Does that mean this restaurants are also manufacturing businesses? Well, to a certain extent, yes, because the chefs they take raw materials, perhaps not raw materials, but beef. They take tomatoes, they take garlic, they take onions, they cook olive oil. They take those inputs and then they cook it. They cook it for the consumers and then they sell it. So so the types of enterprises are not so black and white. They are not so clean in their division of this and that. Perhaps there are certain blends of different enterprises, such as the example of restaurants, which are simultaneously both manufacturing and merchandising restaurants. Okay. All right, and now we talked a little bit about general characteristics of each of the different forms of business organization. So this is just an introduction to some organization of businesses. Of course, we have a single owner, so sole proprietorship, and there is where there is only one owner to it. The typical size of these businesses are really small. Some examples of this includes small retail shops, family retail shops, local service repair shops, uh, lawyers. Doctors are usually not single owners or sole proprietorships, but sure. Another thing to take into account is that there is unlimited liability for the owner. Now, what this means is perhaps if someone, you are sued in an example, then the debt collectors can come and take your personal house away. That means they have unlimited liability. Now, the life of the organization is limited. When the owner of sole proprietorship dies, this entity, this business organization, also dies with the owner. On the other hand, if partnerships, two or more owners are required. Uh, so once again, these are quite small. Sometimes professional partnerships, like law firms, use the structure and the business organization of a partnership. And some law firms or some accounting firms perhaps has several hundreds of partners, but this is still follows the organization of a partnership. Okay, depending. So yeah. Whereas sole proprietorship have unlimited liability, partnerships also have unlimited liability. Lastly, we have companies and corporations, usually many owners. Often these companies and corporations are public, which means the public can invest and the public can be fractional owners and part owners in this company. Lots of manufacturing companies, multinational corporations, retail chain stores, fast food chains. Many of the most of the publicly traded companies are all falls under this range. Unlike sole proprietorships and partnerships, there is limited liability to companies and corporations. If you invest in Tesla, if you invest in Taiwan Semiconductor, the most you could lose is all of the money you invested in. Creditors cannot come in and get your personal. You cannot come in and claim your cat because the company is in debt. The company can file bankruptcy and the company could be dissolved, but owners and shareholders cannot lose more than they invest into a company. whereas sole proprietorships and partnerships that may happen. So yeah, that is a brief introduction. So yeah, what this talked about was business people in accounting. So what they talked about was, oh yeah, accounting is the language of business. Businesses cannot work without. So that's just an introduction to it. Types of businesses and regulations. So we talked about some types of businesses. That's the same picture. And let's talk a little bit about regulation. So regulations, businesses face, of course, a lot of regulation in their operations and their organization. Businesses also face regulation in the reporting of their financial statements. So if we think of generally accepted accounting principles like GAAP or IFRS, these are regulations that businesses have on the financial information that they are allowed to present. So businesses face regulations for a variety of reasons. A few of them are listed here. First of all, consumer protection. Imagine the quality of our food if the FDA or the TGA does not regulate the drugs companies are like Pfizer or Merck are allowed to manufacture. If Pfizer and Merck could just manufacture any drug and sell any drug and claim any results to any drug, then the consumers and the patients will be far worse off than if there is the FDA, the Food and Drug Administration, or the TGA in Australia, the Therapeutically Good Administration, that regulates and ensures that these therapeutic drugs, these medicines are actually doing what they're supposed to do, and they're not harming people. So consumer protection is one major reason for regulation in businesses. Another thing is environmental protection. If we think of companies like BP, like Shell, like Exxon Mobil, right, like Chevron, right? These companies, these oil companies, they of course have polluting natures with perhaps fracking, horizontal drilling to receive the oil, to receive oil and to find oil. Also to extract oil and to purify oil, where it requires a lot of environmental oversight. And of course, as for-profit companies, they seek to reduce the cost. And if there is a proper government regulation on the environmental impacts that these companies face, these companies may have experiencing these companies may undergo the tragedy of the commons, and environmental impacts may be a lot worse than if governments do not intervene and ensure that the environment is protected. On the same line of logic, employee safety, employment practices, and taxes, ensure these companies are not evading taxes, ensuring the minimal levels of employee safety and employee compensation is reached, right? So these are all reasons for regulations, and these are all very sound reasons for regulation. All right, so regulatory environment and whatnot. Also, on this, we also talked about the Enron example of how regulation perhaps is not as strict, and that's why the Sarbanes-Oxley Act was enacted later to ensure accounting oversight and ensure that investors are not misled, and proper auditing of public companies is in place to protect investors as well. That's where the role of the SEC comes into play, and is increasingly being regulated, whether it be the crypto markets or the financial markets. Regulation could be a really good thing because it ensures that the investors are protected from unwanted fraud or from fraudulent activities. All right, private enterprise refers to businesses owned by individuals rather than public institutions, like governments that produce and sell goods and or provide services for a profit. Now, of course, this definition of private enterprise becomes a little murky when governments own non-controlling minority stakes in private enterprises. Is that a business still considered a private enterprise, even though governments hold non-controlling minority stakes? At which point does it become a public company? So yeah, that's a flawed definition, but it's a working definition for now. Factors affecting the complexity in the business environment. So we also talked about some factors that causes the business environment to be changing and adapting and ever so complex. Some information explosion, of course, is also contributes to dangers and perhaps lacks in cybersecurity for certain companies, especially if the company's IP is the competitive advantage, or is the is the lifeblood of a company. If we think of the most valuable companies these days, what do we have? We have Google, we have Amazon, we have Microsoft, we have Apple, we have Nvidia, we have TSMC. These companies, what is valuable of these companies? These companies are valuable because of their intellectual property, because of their information, because of their technological advancements. Now, in order that also comes with certain amounts of risk. Okay, uh, what if they get hacked? What if whatever happens, right? So information explosion is a major factor affecting the complexity and the method in which businesses are engaging. Technological advances, of course, globalization, offshoring of jobs to minimize costs. What are pros? What are the cons, and whatnot? Increased regulation as corporate as countries and economies advance and develop, more and more regulation will be placed on the financial, the capital, and operating markets, which is good, which is understandable. And personally, I will actually advocate for more regulation in the crypto space, and that is certainly makes me so yeah. So these are certainly changes that affect the complexity of the business environment. Increased regulation, more complex business activities, and evolving forms of businesses. Businesses may just be face to face, brick and mortar sort of businesses 100 years ago, 200 years ago, and it moved into the industrial revolution. It's moved into, and now a lot of businesses are online. If you think of Amazon, what's the proportion of their business that's online? Amazon doesn't even make the majority of the revenue from the retailers. Amazon makes the majority of their revenue from the web services and web hosting. But that's a story for another time. So yeah. Okay. I know we also have a quick introduction about bookkeeping. So bookkeeping is made up of payables, which are accounts that have to be paid, and such as employees and contractors, and of course the owner yourself. You should be paid, because why would you engage in business activities if you are not getting paid? Also, we have receivables, sending invoices to people who owe you money, and whatnot. Lastly, we talked about management activities, planning, operating, evaluating, and through each of the steps, receiving feedback and improving along the way. So yeah, this is this is a brief introduction. This is a brief introduction into Buzz 1030, which is accounting, business, and society, which I personally think is more of the practical intro to business class, whereas the Buzz 1000 Future of Business is more of the theoretical intro to business class. So yeah, that's pretty much it. I hope you guys enjoyed it, at least have take something away from this video, and I'll see you guys next time. Take care and goodbye.